Hey Les, hey Roy. See how that works. Too far. Far enough. Ah, that'll do. That's close enough. There we go. Right. Shut up. You're supposed to be asleep, snoring. The only reason people come onto my stream is to see you snoring. Sorry, Les, I'm not sure what you mean. What do you mean, have I tried writing down my investment policy? There we go, I've got chat. That's what I was trying to get. All the chat boxes up. Oh right, okay. So I'm in the middle of multiple things. Yeah. So Roy, what do you mean by writing down my investment policy? What are you after? Hey Michael. Good morning, good afternoon to you, wherever you may be sat. This morning, as per Friday, so Friday, whilst I didn't actually take a trade during the live stream, I did trade on Friday, got just under $12,000 of profit. I jumped on the back of the monkeypox vaccine saga, so PWV, SIGA, EBS, all of these bioscience stocks that produce smallpox vaccines kind of moved up on Friday after this outbreak of monkeypox. I was able to get some of that action. I didn't trade it, I just swung it, and it, well, no, I don't. I don't write down my investment policy from that point of view. If you're getting at what I think you're getting at is when it comes to support and resistance on trading. So my investment policy is quite simple. Is I do a bit of research on the companies I like. on the instruments that I believe in, and I dollar cost average. It's very simple. I just, when I've got some money to left over, I'll spread it about and put it into the various instruments that I believe are worthwhile investing in. And I keep it there. And I don't even bother about the performance of it. I don't bother looking at it next week, next month, whatever. I'll just dollar cost average. And if it goes up, I'll ride the wave up. If it goes down, I'll buy more at a discount and average and keep dollar cost averaging. That's my investment policy. And in the long term, I know I'm going to be good because I've done my research and I know which stocks are going to be good for the long term, the historical data that is there to back that up. From a trading point of view, I look for support and resistance. If you're talking about intraday, it's not so much investing, but trading. But if I look for intraday, then I'm looking at where the support levels are, where the resistance levels are, you know, what areas are potentially good areas to enter and or exit. I look at the price action. I have my trading strategy, which I use. So always ready to make money, Alistair. Yeah, so the way I look at this, just from a pure trading, I've got multiple streams of income that I have. But if I just look at my trading expenses and the profits I take from trading, for example, so at the end of each month, I take the profits out that I've made that month. Start each month, on average, I start each month with about $30,000 in the account. Then any profits that we make on that month, I'll take that at the end of the month from starting the next month for $30,000. That's kind of what I do in this for my day trading. I could leave it a little bit, maybe grow the account to 100,000 or whatever it is, and it's easier to, the more money you have, the easier it is to make money. So it's quite simple that way. But for me, I keep resetting my account at 30,000. The profits that I take, I kind of break it up into three pools. I put a pool away, and whilst it's garnering interest for me, it's garnering and growing for me. It's a third of it, put it away, and that's paying taxes and costs and things that are associated with the business. I put a third into my own account, which is for me to do with whatever I want to do with it, whether I want to gamble it, you know, sex, drugs and rock and roll with it, but whatever the situation may be, cost of living, all that kind of stuff. And then the other third is to reinvest in safer investments. So your 75k that you got invested long term, I don't bother skimming. I don't skim off the top of that. What I do is I leave that there and I dollar cost. So the third of profits that I get from my trading, that I then reinvest in other, like I say, what I consider safer long-term bets. So I've got a stock portfolio. I've got a couple of ETFs that I invest in as well. I've got crypto. I'm holding crypto long term. I actually just added to both my Ethereum and Bitcoin a couple of weeks ago when it dropped, and so that's what I do. I don't skim off the top in terms of my investments. I skim off the top in terms of my day trading, because my day trading outperforms the market. My investments, whilst in line with the market, are outperforming inflation, even though we're at high inflation levels right now. And then I've got the tax man, just a little pool there sitting there ready that I can withdraw it and give it to the tax man. As soon as my accountant tells me how much I need to give, that's what I do. How much I need to give and when and by when, and I'll leave it. And I always leave it to the last minute. And never pay the tax man up front. Just leave it to the last minute and then pay. Why should they be getting the interest when I can? Good start to the day for 20 people already. Good start to the stream. Let's keep it going. So I'm feeling good about today. Although the one stock that I thought might continue to move, it moved a huge amount after hours on Friday, was SIGA Technologies. It's starting to pull back. Had a great day on Friday. And it's the one that we made most of our money on Friday. I wasn't going to trade on Friday, but it was set up just so nicely. I couldn't resist, so I had to. And SIGA moved a huge amount. Would have been a good. It would have been a good swing trade at the open, and then swing it over the weekend even. Then again, it closed just over 12, so it's now 1440s and retracing, so it might be down to 12 again by the time the bell rings. So let's see. I totally agree with you there, Cariant. Morning, Alphabet. Advice for a beginner with a low startup cost is go for investing and save up some money. Don't try day trading. If you don't have money you can afford to lose, don't get involved into day trading. Most people who get involved in day trading, regardless of the instrument, whether it be equities like me, whether it be futures, whether it be commodities, whether it be crypto, whether it be forex, most people, 95% of people lose money. So first and foremost, don't create stress for yourself by trying to make money with money you can't afford to lose. That's the first piece. The second piece is I recommend at least $5,000 as your starting account. You're going to need between $500 and say $800 US dollars, because everything seems to be priced in US dollars when associated to trading. So I would say between $400 and $800 on a monthly basis is your actual cost of trading, your ongoing costs. So your scanners subscriptions, your platform and data fees, so everything that's over and above commissions and charges that are racked up whilst you're trading, everything over and above that, I would say you're going to be racking up between $400 and $800 per month in expenses. So have at least 3 months of expenses on top of, so let's say it's $400, you need another $1,200 plus your initial investment of about $5,000. So I would recommend don't start trading until you've saved up at least $6,000. That's my advice for a beginner. On that basis as well, is before you start trading, practice. I'll come to that in a second, Giant. Before you start trading with real money, trade in a simulator. Learn how to read the charts, learn how to spot price action and recognize areas of support and resistance, learn how to spot patterns, get a strategy that's proven, documented strategy that's proven to work, and practice in a simulator. It's not as easy as I make it look. Not that I make it look easy, but it's not as easy as I make it look. My performance in the long term is not typical performance. A lot of people, and if you go in there expecting to make big bucks straight away, you're in for a rude awakening. Start small with small expectations and take the time, like any other profession, take the time to learn the skills in order to be successful. So that's what I would my advice for a newbie. Okay, what are the scanners for? So the scanners are there to alert you on what stocks are moving, how much they're moving by, why they're moving. It's there because there are literally thousands of companies out there on the stock, listed on the stock market, and there's probably a handful of 4, 5, 6 stocks on any given day that you want to be interested in. And it's those stocks that you want to be interested in that hit your scanners, and you've got the volume, which is the indicator of the amount of shares being traded. The higher the volume, the more shares are being traded, the more people that are actually trading it. So you follow the crowds, and you've got the volatility. So the volatility comes when you get the big moves, big percentage moves, and you need both volatility and volume. If you're getting a high volume, like Bank of America gets, millions and millions of shares traded every single day, but it's got a range of about 10 cents. So you're not getting the volatility there. Might move up 10 cents, it might move down 10 cents, and it's kind of a constant range. So you're not going to make much profit trading Bank of America unless you've got big deep pockets, and you can avail of those micro moves by having huge share size. And Bank of America is not a small price stock either, so you really need deep pockets to be able to trade it profitably. Whereas the low cap stocks that I'm trading, you want the volatility. So I'm watching SIGA right now, and a 1 minute candle might move 10 cents. It might move 20 cents. If it moves 10 cents, you want to be able to capture that whole move. If it's over 5 minutes, it might move 40 cents. So you might capture 20 or 25 cents of that move. So if you've got 1,000 shares and you captured 25 cents of that move, you just made yourself $250. So if anybody using my name, check the background on the photo, because a lot of these people are using an old photo of mine pretending to be me, and they've got a black background on the photo. Mine's now a white background on the photo, just to differentiate me from those morons. So I don't go out contacting or adding anybody. So if somebody's adding you and trying to contact you, just block them, report them for impersonating me, pretend I'm a celebrity or something, because you can't, it has to be a celebrity or whatever. Hey Michael, GM Motors, let's have a look. They've got earnings today, GM. Slightly up today, no volume. Well, it was reacting. So SIGA manufacture vaccines, and they also have a smallpox vaccine in the portfolio, and along with a few others. And last week, this outbreak of monkeypox, which is a derivative of smallpox, is one of the reasons that SIGA's really taken off. So I wasn't going to trade on Friday, and then there was a couple of BWV vaccines, and SIGA both took off, and I traded them both. I should have been 20 grand up. If I'd sat at my desk, basically I put my trade in, stop loss, and then went away, came back about 90 minutes later, and I made, I think, just shy of 12 grand on the day. And if I'd sat at my desk and done it, I probably would have made 20 grand with those two stocks. They went up a good $1.50 from where I got in. So sometimes, but just the way I was feeling on Friday, I was getting a bit stressed out, and it wasn't conducive of me to sit in and actively trade on Friday. So I just swung it for the day. Should have put, in hindsight, I should have put a range stop order for a whole dollar take profit. But look, all's well that ends well. we've got a good chance of finishing green on the month if we have a good week this week. That's all I'm saying. The equity on a position at the moment is just over 40,000. So we're still in a slight drawdown. We're about 20,000 down on the month. So in order to get beyond this drawdown, we need to have a 20k week. BWV vaccines. That's what I traded on Friday. Those two. Check out the YouTube channel. I did a quick. I think I did a quick review of that on Friday for YouTube. Well, $11 wasn't far off where it closed. So it closed at just over $12. So closing price on Friday was $12.40 SIGA. If you got out in the 11s, you weren't too far behind. VMware looks like it's having a good day today. This is SIGA Technologies. That's interesting. So VMware are trading high a bit following reports that Broadcom are in talks to acquire them. And yet, conversely, Broadcom are losing. So Broadcom are losing money, are losing value. This is Broadcom. Let's look at it on the 60-minute. You see Broadcom is losing money, and we've got VMware is mooning. So Broadcom's looking to acquire VMware. So VMware's taking off, but Broadcom is losing ground. So two sides of the same deal, the acquirer and the acquired, having mixed fortunes as a result of that announcement, or that rumor, shall we say. It just goes to show that the market can be fickle. That's all that matters, Michael. Don't ever succumb to FOMO. If you get in, make a profit and get out and walk away, and then you come back later and you see that when you got out it continued to rally and continued to move, don't berate yourself for getting out and taking a profit. You've made money. Just because you didn't maximize your gains and take the whole move doesn't mean that's a bad thing. It just means, yes, you could have made more, but you made money. And any day you make money, any day that you're green is a good day. So don't berate yourself for not capturing the whole move. Because it continued to move up, Snart Moss. So I put the stop loss. So I should have put a range stop in, so I had a take profit and a stop loss. But I put a stop loss and I didn't have a take profit. It continued to move up. It moved. One of them moved up. I think it was BWV moved up about $1.50 and then started to retract. So when it came back, I was about 2,000 up on that particular trade. And then I cancelled the stop loss and replaced it with a range stop, and it ended up stopping me out anyway for just over $2,000 profit. But SIGA, I put the stop loss in place and went out, and I came back. It had been up, it had come back down again, and then it started to move back up again. So when it started to move back up, I got to I think it was almost just shy of a whole dollar move. As soon as it started to retrace from there, I thought I'll just cut it myself. and manually took the profit. I closed on SIGA. I closed the transaction manually myself, and on BWV, I'd moved the stop higher from when I came back. I just moved the stop higher, and I ended up getting stopped out. So that was why both trades closed. And I didn't really sit at the desk after those particular transactions. I didn't sit at the desk. I didn't mull over it. Yeah, TNXP. I'm thinking TNXP could be a good one. I think overall there's probably 3 or 4 that I'm looking at. So TNXP. So it's not looking great right now. This is TNXP. Look at on the 60-minute. You can see it moved up, but it's retraced up pretty much all of its gains pre-market. However, it's one of those that makes a small. It has vaccines for smallpox. Then we've got SIGA. We've just been looking at. We've got EBS, which is moved up and it's holding most of its gains. And we've got CMRX, which is here, and that's similar pattern to TNXP. So this moved up. It's slightly less expensive. It's slightly below the threshold that I have for stocks to trade, but it could be one to watch today, along with TNXP, and again, this is below my normal threshold. But watch it. Probably won't trade it unless it gets back above the $3 level, where EBS, SIGA, and Blue Water Vaccines as well would be worth considering. So watch those. Bioscience stocks where it's at today. That's my view, my opinion, and I will be sticking to that opinion for now. But don't do it, Lou. You 7,000 to put in a penny stock, which you personally think will be great. Don't do it. A lot of these penny stocks are garbage companies. If you're thinking of just banging it in long term and investing in these penny stocks, don't do it, because they'll make a move up, and then let's have a quick look. How's Neuro getting on? Because this moved up a couple of days ago, and let's look at it on the 60-minute. So this is Neuro. This moved up pre-market a couple of days ago, came back, and then had a rally into the close. It's sold off ever since, and this was a good catalyst at the time. I think it was Alzheimer's catalyst or whatever it was. There was a couple of others that I traded, similar kind of setup. What was INDP? Was another one? It's a cancer catalyst. Yeah. So this popped up a couple of days ago. I think it was Thursday last week. It went up to 360 from kind of 240s, and then sold off. It's now 260, so it's lost pretty much all its gains. So this is what I'm talking about with the penny stocks. If you've got $7,000 to invest, you either trade it intraday actively, or you invest it long term. But don't get into these crappy pump and dumps, which essentially is what they are. If you've got $7,000 to invest, don't put it in a penny stock. They have their moment in the sunshine, and then they disappear, which is why you ride them intraday, because they sell off just as quickly as they rally. You do not get married to these penny stocks. There's a reason why the penny stocks. There's a reason why they're priced at like $1 and $2, and it's because they're not great companies. Long term, they're just not great companies. If they were great companies, they'd be priced $50, $60, $70 and above. Champagne Friday. Bull flag for where? I'll have a look at, give you my opinion, and it's like exactly that. Not financial advice. I'm not a financial advisor, so all I'm prepared to do is give you an opinion. What happened last week on Thursday with well, Marion, 7K to you might not be much, but 7K to somebody else can be their life investment. It could be the life savings. So it's all relative. And what I would say is if you put 7K into an index-linked fund today, depending on how, I mean, I don't know how old Lou Tim is, but if you're early 20s, for example, you put 7K in an index fund today, the compounding effect of that rolling on for 20 years and just leave it there for 20 years, the compounding effect of that is going to be huge. So while you're saying it's not much of an investment, if you're prepared to be patient with it, it could be quite a, one hell of an investment. There's no volume on NanoX, so from an intraday basis, the volume needs to pick up. Now it did have a good day on Thursday, moved up, but then it didn't have such a good day on Friday. So it's been moving quite well over the last few days. Got a high up here of almost $15, $14.77, but it's ranging sideways around the $10 mark. So do I think this is going to be something I would invest in? I'd have to look at it. Long term, it seems to be selling off, a downwards trend, but we're in a bear market. So I'd have to look at the fundamentals to see if there was, I believed in this long term. It doesn't look like something I would invest in long term, but from an intraday basis, talking about NanoX on an intraday basis, there's not enough volume. It's not even up on the day, it's slightly down on the day, almost a percentage point down on the day. And there's just not enough volume to be trading it intraday just yet. So, do your own research on that one, Frank. Nvidia, long term, I'm bullish on Nvidia. I like Nvidia. So it's moving in line with it tends to move in line with the wider market. I think where they're placed, the projects that they have, the company itself, I think they're ideally placed to take advantage of the e-gaming arena, which is growing in quite rapidly. They're very well placed to take advantage of the growth in crypto mining, and so there's a lot of good things that I like about Nvidia. It's beaten up for the last couple of months in line with the market, because the market's been very bearish. So Nvidia has been very bearish as a result. You look at it on the 60-minute, on the daily even, you can see how it just follows similar pattern to the overall market. If you look at the SPY, for example, SPY's very similar pattern to what Nvidia's doing. So that's my thoughts on Nvidia. Well, the rains are coming down, and it's not in Africa. Sorry, Farron. I'm zipping through the stocks, so I'm missing your question there when you're asking it. So right now I'm looking at SIGA, which is, it was up about 28% on the day earlier, but it's retraced. If you look at it on the 60-minute, you can see how much it's retraced from the high of 1750s pre-market, now down over $3. So I'm not discounting this. It could still come back, but I'd need to see I need to see a bit. I need to see it above the VWAP. As long as this remains below the VWAP, it's downwards trending. So I want to see this above the VWAP. Short it if it continues to sell off. But right now I'm looking at that. I'm looking at SIGA for a move up, and I want to see it above the VWAP. Just wondering what the VWAP is. The VWAP is this blue line here, and what it does is the VWAP is the volume weighted average price. So it's a technical indicator that tells you what the average price is based on how many shares are traded over the last X amount of candles. And that way, if you're getting more shares traded at a particular price, it moves closer to that price. It's a great intraday trend indicator. It ceases to be accurate beyond the daily time frame. So if you're looking beyond the daily time frame, the VWAP is, you're better off looking at, you know, exponential moving averages or something like that. Whereas the VWAP I find is very useful intraday. So smaller time frames, 1, 5, 10, 15, even the hourly chart, it's worth keeping a note of, because as long as the action takes place above the VWAP, you're in an upwards trend. And if it takes place below the VWAP, you're in a downwards trend. So if you're going long on a stock and you're below the VWAP, you've got to be very cautious that it may turn against you, may get faked out. It's on futures. Well, I don't trade futures, so I couldn't really comment too much about that, Marion. But the VWAP I've found pre-market it's fine, because whilst it is still a little bit off in terms of depending on how many candles you're going back for, because of the lack of volume pre-market. So what you tend to get is a swift move in the VWAP at the bell. So it's relevant. It's still very relevant because it's all relative to the market you're trading in. So if you're trading pre-market, the volume candles that you're getting, that we're seeing right now, these big volume candles are not really big volume candles after the bell. So you actually look at the 5-minute chart, for example, and after the bell, you'll see most days that pre-market volume is non-existent. But whilst you're in pre-market, you'll see that actually pre-market volume is there, but it then becomes relative. I don't like Forex trading, and I don't trade Forex. I just find Forex is a lot more risky than stocks and equities. At least with equities, you can get a catalyst that's relevant, that moves the stock. And it makes it that little bit more reliable when you're getting breakouts. Technical analysis, the same technical analysis, the same patterns and everything else can be applied to Forex as well as that I use on equities. But the moves between a Forex pair are so incrementally small that you have to take huge leverage first and foremost, which increases your risk, and you're actually chasing the action rather than looking at the catalyst and looking for reliability. The volume in Forex tends to be a little bit off in terms of the volatility, whereas the volume in equities is a lot more predictable. If you're getting high volume in equities, you're going to get the volatility. With Forex, it's the relationship's not there the same. So you tend to be, for me, unless you're really got a really good strategy, and I'm sure that there are a couple of people out there that do have good strategies, but for me, Forex is a lot closer to gambling than what I'm doing with equities. That's just my thoughts. No, I kind of agree with you there, Marion. If I'm being You know, I would agree with you 100% there, that there's a lot more institutional trading that moves the markets in Forex, whereas retail traders in the equities market have a lot more, particularly in the small cap stocks. So if you're looking at small float stocks and retail traders are trading it, it's more likely to have an impact than it will on in the Forex market. So anticipating price action in the Forex market is very difficult, which is, like I say, you're always chasing the action. And that for me is, you're removing one of those, one of your potential market edges, and the risk is increased because of the leverage that you have to have. And so my philosophy on trading is you want to reduce your risk and manage your risk as best you can. And with Forex, because you're taking at least 20, 50, even 200 times leverage to get those profitable moves, it can easily go away, go the other way and blow up your account. The higher the leverage, the more risk you're taking. You can lose a lot of money too, fitness. Yes, you can make lots of money, and you lose a lots of money, and more than 95% of people are in the latter category. They lose money. Most people who trade Forex lose money. Most people who day trade the stock market, equity shares, stocks and shares, 85% lose money. When you include instruments like Forex, that number increases. It's actually 95%. So the majority of people that get involved in trading Forex lose money. It is a risk. Trading is risky, regardless of what instrument you trade. It doesn't matter whether it's crypto, it doesn't matter whether it's futures, it doesn't matter whether it's the indexes, it doesn't matter whether it's commodities, it doesn't matter what you're trading. If you're trading for a living, it's risky. You can try to, get an edge in your favor, but if you're risk averse and you don't like to lose money, then nobody does like to lose money, but you can't handle losing money, then trading isn't for you. If you can't handle risk or can't manage risk, trading isn't for you. You're absolutely right, Marion. That's what I'm saying. 85% of stock traders lose money. 95% of Forex traders lose money. So people are more likely to lose money. And I think one of the reasons for that, a number of the reasons are the same. So this approaching the market with a gambling mentality, big no-no. Straight away, you're going to lose money. It's like going to the casino. If you approach it with a gambling mentality, regardless of what edge you think you've got, you're going to lose money. The second thing is that the barrier to entry for Forex is extremely low. So you get a lot of people trying to make money with very low, with a very small account. And to make money with a small account is extremely difficult. The smaller the account, the more difficult it is. Because if you start, then you really need a zero commission account. If you're trading with anything less than $1,000, first and foremost, because the commissions will eat into your gains. And if you think about it logically, most in the stock market, most brokers that are charging commissions, a round trip's going to cost you anywhere between $5 and $10, depending on how much those commissions are and how much you're trading in terms of share size, etc. But a round trip, so an entry and an exit, without any price action in between, an entry and an exit is going to cost you about $10. So you need to be making at least $10 just to break even every single trade. So then you've got to work that into your risk versus reward strategy as well. And you've got to say, okay, well, how much do I need to risk if I need to make at least $10? Well, if I'm going to be profitable, I need to be making at least $15 or $20. And then my cost of trading is going to be taken out of that. So if I'm making $10 after commissions and charges and the likes, am I risking $10? Is that right? And in the Forex market, the risk versus reward becomes very, very much more difficult to manage, because that cost to entry is lower, so you end up getting into it and trying to trade it with, you know, a $500 account. So what's your expectation on a trade? You go in all in on one account with your entire balance on a single trade, and you're looking to make 10% on a trade. Are you really expecting to make 10%, i.e. $50 on every single trade? The mind boggles. Like, your risk reward is just all to cock if that's the case. Red box, will it go quietly into the night? What's it doing now? Stick it on your no trade list. Just don't trade it. Actually, it's up 520s at the minute. Had a good day on Friday. I didn't trade it, but I remember seeing it having a good day on Friday. It's down on the day, slightly down, about 8% down on the day, but that's hardly a sell-off considering where it's come from. So, answer to your question, James, will Redbox ever go quietly into that? Eventually, I dare say, but it's hanging around for a bit longer, it seems. Well, I don't think it's the variety of companies that gives the edge to the stock market. You can apply a lot more different concepts, a lot more trading concepts with equities than forex. I totally agree with you there. If you can go for technical analysis, technical trading, pattern breakouts on either, but you can trade the news a little bit more easily and anticipate the news a little bit more easily with the equities market than you can with the forex market. You can. It's easier to ride a stock that's having a great day. Let's say a stock moves 750%. You don't need huge leverage to make money off that, so your risk is a lot less trading a stock that's having a great day. Whereas I can't think of any somebody. I'm not a forex trader by definition, but you correct me if I'm wrong. Has there ever been a time when a forex pair that, you know, has moved 200%, 100% intraday? Govex will be one of those vaccine companies trying to jump on the back of the monkeypox outbreak. It's going to be a lot of bioscience vaccine companies that are going to be able to provide smallpox vaccines, which will address the monkey, because monkeypox is a derivative of, it's a variation of smallpox, a bit like chickenpox used to be, but it's actually quite difficult to transmit. It's not airborne or anything like that, and it is quite difficult to transmit. So it can be fatal, however. So a lot of vaccine companies are going to be saying, look, we've got a smallpox vaccine, here it is, and trying to jump on the back of and profiteering around this kind of news. Yeah, absolutely, Snort Moshi Quackamoto. Finviz is a great website. Any website, so Yahoo Finance, Finviz, the NASDAQ website itself. There's a lot of great websites out there that you can garner information from. I don't dismiss any of them, and I look at Finviz all the time. I look at Yahoo Finance all the time. There's a whole bunch of different websites that I use. You know, snoring is not me. I'm not sleeping. Geovax Labs, and it's there's going to be, like I say, there's going to be a few of those. Going to be a few of those that decide. Get rid of that. Try and cash in on this this monkeypox outbreak. Warrants seem to be moving as well. A bit cheaper. A lot cheaper. Yeah, so what I'm seeing here is SIGA, GeoVax, INO, IMGN, EBS. All of these are on the kind of price watch list for a number of different analysts, simply because of last week's outbreak. Bioscience is where it's at today, I think. Okay, so SIGA to the moon. Well, it already did, but let's see what happens. It's snooze. Why do I say I pay the taxman late to invest? So I only get taxed on my gains. So if I've got an investment that's in place, I can't get taxed on it because I've not realized any gains. So you don't get taxed on the positions you're holding. You get taxed on the positions that you've realized. Have I got LinkedIn? Yes, I've got LinkedIn. You can Google me on LinkedIn. I'm referenceable. It's snooze. Well, I think, there are people that trade Forex and that they have their own systems, and people say I'm gambling with the markets using my strategies and things. But, if you've got a strategy that works and you're not approaching it with a gambling mindset, then fine. If that's Forex, good on you. If it's crypto, good on you. I'm not berating anybody that's making money on the markets. Quite the opposite. I'm actually congratulating anybody that makes money in the markets, and moreover, I'm teaching people how to make money on the markets. So, if your instrument of choice is Forex, it's not something I'm going to talk to you about. I'm not going to teach you about that because I don't trade Forex for a number of different reasons. I don't believe it's a good way. You can manage your risk effectively trading Forex. That's my opinion, and that's why I don't trade it. What are my credentials? My credentials for what? I don't need credentials. It's snooze. My credentials are I'm the guy on the internet. And if you're on my YouTube channel, you'll see I'm not a financial advisor. I'm not offering financial advice. I don't need credentials to have a channel showing me trading the markets. Of course, I've worked. What do you think? I've been unemployed all my life. The last job, I was regional vice president of a multinational software company. So I've been up in the C-suite for quite some time. But if you're asking, am I a financial advisor? I don't have to. I'm not. I'm not trading anyone else's money other than myself. I'm not trading anyone's money but myself. And I'm telling everybody, look, it's risky. Don't put money in the market and that you can't afford. And I trade live. That's my credentials. My credentials are the money that I make. When I stick around, you might see me do it. I publish my results, my broker statements, my trader view statistics. Start using volume profiles, and we've got another pocket expert here. Oh yeah, okay, Snooze. Okay, cheers. Thanks for the advice. Oh. Ooh. What you don't actually see on this screen, because you're on TikTok and you can't actually see what I've got, is that I've got the order book open. I've got the level 2 on the screen. I've got the time and sales on the screen. If you go up on a YouTube channel, you'll see a lot more. I've got the Nasdaq total view order book open. So I've got the time and sales ticker going that I'm looking at. The volume profile, you can actually see the volume profile there in front of you. So I've got volume on this chart alone here. I've got volume by price, and I've got the volume histogram at the bottom here. On the scanners, I've got relative volume. I've got today's volume, session volume, if you will. I've got volume over the last 15 minutes, the last 5 minutes. I'm not trading blind. That's all I'm saying. But if any more advice you want to give to me, that's fine, buddy. I don't mind answering haters, because look how many times he's commented. It's great for the algorithm. The more he comments, the better it hates it. The more it helps me. Yeah, Marion, look, if people who want credentials, you're absolutely right. Just watch the trades. No, get onto my YouTube channel. You can watch any of the live streams. You can watch some of the lessons that I've put up there, the summaries that I've put up there, whatever it is. Granted, I've not been as profitable as I would like in May. Like I said, I'm still 25k, and well, depending on which statistic you want to take, I'll take my actual net numbers. So as of the end of last week, 23,388 in the red on May, and that's me being completely transparent. People who don't know how to trade and who won't go live won't do that. Shando, just check the link in the description, the course, and scroll down to the bottom of that page on the course. You've got my last 6 months broker reports and the corresponding trader view stats, Shando. It's not, look, I say this every single day to everybody that comes on the channel, because we always get people that come onto the stream that have not been on here before, and I say this to everybody. It's, look, trading's risky, and if you're thinking about getting into trading and you don't know how to start, the answer is don't do it. Read about it, teach yourself about charting, learn about technical analysis, spend a couple of months, actually investing some time, investing in yourself, maybe take a course or two. Mine's very affordable. But spend some time investing in yourself to learn about trading rather than just throwing some money into the markets, because the markets will just take it off you with a big thank you. In fact, it won't even give you a thank you. It'll just silently take it off you and you'll be left broke. If you're thinking about getting into the markets, think twice and then think again. Most people lose money in the markets. It's not as easy as people pretend it is. And the majority of people that have got these private discords and selling you membership to get into those discords for signals and alerts don't know what they're doing. They will give you signals and alerts, and 50% might work, 50% probably won't. But in the long run, those people are probably going to be losing money the same way that you're losing money, and they will cause you to lose money. The only way that you're going to make money in the markets is by learning how to trade yourself. There are no shortcuts. If you think there are shortcuts, you want to take signals from somebody, because I've done that. I thought that somebody that knows what they're doing, I can take a shortcut, I can jump in when they say to enter, and I can jump out when they say to get out. And guess what? I lost money. Most people lose money. So Dadabung, even better. Absolutely agree with you there. So take a couple of months to learn how to do it, and then take a couple of years to practice in a simulator even. It took me a good 7 months of consistently losing money before I turned a corner. It takes a lot of people it takes other people a lot longer than that. And it was only the fact that I had time on my hands to completely submerge myself in it, I was able to learn the nuances of risk management, pattern recognition, technical analysis, charting, all of that. But yeah, I mean, it's a trade, it's a career path like any other, and it's a skill set that needs to be acquired, and you need to garner and practice that skill set and improve on that skill set day after day after day. There are people that I'm engaged with now, I'm mentoring right now, that I can see they've got what it takes to be a successful trader, but they're not quite there yet. They're recognizing the patterns, they're recognizing the breakouts, but they're entering maybe too late, or they're entering too early, or they're exiting, they're holding on to the losers too long. They're not managing the risk accordingly. All of this is it takes time to get to. There's quite a few good books that I do recommend, and there's some books that I actually read myself, and in fact I've included a bit of a library in the course as well for people that join, and they can they can actually get access to those books. But if you want me to call out a few, just let me know, and you can probably check them out yourself. My advice is do as much research and as much studying as you can. If you want me to... Hey Darren, I tell you what, Marion, I'm still learning every day, and that's what's great about building this little community that I've been able to have the privilege to start building, is that if someone comes on the stream and they'll mention something, and I'll go and have a look at it and start looking into it and learning something new about it, or they'll tell me it's something that maybe I'm not previously aware of, and it's a new learning experience for me. So every day is a school day, and you should never stop learning. So I agree with you, Marion. You get to a point, for me, I've got to a point where it's been 100% open about this, and anybody that's a regular to my stream will know this. May has been difficult for me. I've been finding it very difficult trading in May, and sometimes I've got to a point where emotions have got the better of me, and I've gone in big size to recover, you know, revenge trading in some cases, or I've taken trades I shouldn't have taken, and the psychological element, which is, and the emotional element, which are the two biggest obstacles any trader will face to being profitable. I've found this last month has probably been my most difficult month, even before I started, because when I started, I expected to lose, whereas I went on a run of almost 18 months without having a red month, and I've been red all month in May. I have a chance, if I have a good week this week, I have a chance of getting green on the month, which will then help me with my own personal confidence with it, to say that, look, it's a moment in time, and everybody's going to have that. Every trader loses. Every trader loses money. Even the best traders lose money. You look at Kathy Wood right now, and she's going through the mill, and ARK Invest are going through the mill, and that's not even day trading, that's investing. And they're really going through the mill because of some of the decisions they've made. So every trader loses, and this element, this psychological element of being able to accept your losses and get over them, and get over them quick, it's a very big hurdle to overcome. James, it gets a lot of people. See, the problem with the reason most people hold on to the losers too long is they don't want to be wrong. You get into a trade, if you're doing it properly, you're getting into a trade for a reason, and you wouldn't get into the trade unless you believed it was going to go your way. When it goes against you, you're thinking, well, my reasoning was valid. It's going to turn around. I'll hold it a bit longer, and it continues to go against you. Stay away in May. I made a good profit last May. How much did I make in May last year? Let me just have a quick look. It's 21, wasn't it? I just have a look at my reports. This is trade profit and loss, not net profit and loss, for May last year. That's not right. Ah, right, okay. I'm looking at from January to May. So I want to be May to May. I think I'll be able to read a calendar. Yeah, I had a good year last May. 166,000 on the month. That's trade profit and loss. That's before commissions and charges and things. I'd have to look back at what that actually was with that, but it was a good month last May. So complete turnaround from this year. I've yet to make a profit in May this year. Trade profit and loss this year. Well, according to I'll have to have a look at that. According to TraderView, I'm only 15,000 in the hole on the trade profit and loss. But I know I'm actually 23 in the hole because of the commissions and charges on top of that. So, but 15,000 in the red on May at the moment. So, I think that's not bad considering. I personally believe I've been trading badly this month. Yes, I do. I've just highlighted where you can find them as well, Delarixim. Aside from the pinned video in my profile on TikTok, if you go into my link tree, check the very first link, which is the course that I put together, and scroll down to the bottom, you've got 6 months brokerage statements and the corresponding trader view statistics that go with it. So check it out. The fact that I trade live every day in front of everybody, it means that I can't exactly hide. See, snooze, check out the YouTube channel. Do yourself a favor before you make yourself look silly. Check out the YouTube channel. I can't show all the time frames I'm using on TikTok. There's just not enough room. There just isn't enough room. I've got, right on the YouTube channel, you can see I'm using 4 different time frames on a particular, any given ticker that I'm trading. I've actually got a 5th time frame that's actually off screen that I'm using as well. So I'm using the 1 minute, the 2 minute, the 5 minute, the 60 minute, and the daily at any given time. But I flick between time frames. Yeah, absolutely. Come on, criticizing, and you probably don't even know what you're talking about, you snooze. Why would you not use a 1 minute time frame? But thanks for the interaction, buddy. Snooze gives tips. He says go to sleep. But thanks for the interaction. You're really doing my you're doing the algorithm a wonder of good for you're saying you're not going to give me a rookie like me views, but you are doing. You're actually interacting with me on the you're actually interacting with me on the channel. So you're contradicting yourself, buddy. I'm looking at CNCE for you here. This is the 1 minute. It's about 10% up on the day. Very choppy. Put it on 5. Very choppy. This is not for snooze's benefit. On the daily, it's been steadily gaining over the last while on the 60 minute. Concert Pharmaceuticals. We've got a catalyst today that could be. It's just popped up on the scanners. I know that much. All right. Okay. So Concert Pharma's product shows clinical efficiency against scalp hair loss. So it's to help hair regrowth and alopecia in areata patients. It meets the trial's main goals. So good pharmaceutical trials. That's the reason why that's moving today. That's why it's moving up. So decent catalyst. Relative volume. Yeah, it's good relative volume. 7 times relative volume already. So yeah, it could be one to watch. Good spot. Good spot, Michael. Sounds like a lot of people are losing their hair, Jackson. I'm not losing my hair, but no, the CNCE, which is Concert Pharmaceuticals, has just hit the scanners on news of good pharmaceutical trial results on an alopecia treatment. So, of course you do, snooze. Of course you do. You work for a large brokerage firm. That's why you're trolling TikTok. Makes sense. You do you, boo boo. You wouldn't know a large brokerage firm if it called up your ear end and died. But like I say, you do you. Of course you did. That's convenient. We can all say we work for a large brokerage, but there's only one between everybody in the chat and myself. There's only one person out here that's got the cojones to actually go live and trade live. But you know, put your money where your mouth is. That's what I say. Start your own channel. Show how good you are. I'd say not very. Probably about 19. That's what you do. You troll TikTok accounts. Yeah, he must be some billionaire hedge fund manager. Must be Marion. I'm using four screens. I've got my laptop with obviously the laptop screen and 3 separate monitors on top of that, Marion. So I've got the one in front of me. I've got my laptop screen, which I've got my scanners on. I've got my trading screen in front of me, which is where all the price action is, the order book time and sales, level 2. It's actually total view, but level 2. Then on the third screen, I've got my watch list in chart format. So, and I've also got a 5th time frame of what I'm trading right next to it. I've got a little window, which is what you're seeing, which is about a quarter of that screen, which is what's being broadcast on TikTok. Then on the 4th screen, I've got the chat from YouTube, Twitch, Twitter, and TikTok all in one place. I agree with you, Jackson. You know when people are full of crap when they start spouting it, you know. Although my mom used to have a lovely piece of advice, and I think I might apply it here. She said, never get involved in an argument with an idiot, because to onlookers, it's difficult to tell who's who apart. So I think I'm going to take that advice here. Ronan, at this moment in time, we've got VMware's having a good day on news of a potential buyout. We've got SIGA. We've got a few of the bioscience stocks that are moving on the back of the smallpox stroke monkeypox outbreak last week, and that's about it at the moment. Oh, Concert Pharma as well, which is moving on the back of good positive clinical trials for an alopecia treatment. It seems like bioscience is the place where most things are going to take place today. Oh, here we go. So Snooze is now saying short GBP. So he's moving from being a multi-million-dollar hedge fund manager, so now he's trading forex. So it shows what kind of crap that he talks. He's jumping between one instrument and the next. So he must be an expert of them all. What can you say? You know what they say about jack of all trades. Well, I'm just going to wait for the open. What I expected to be ripe for the open was SIGA, and it's underneath the VWAP at the moment. So I'm just going to hold off and see what the open brings. EBS is above the VWAP, similar catalyst, similar area, but the volume's not great with EBS. So again, wait for the open. The volume might come in, and they're a similar amount up, but it seems like EBS is on its way up, whereas SIGA is on its way down. Look at it on the 60-minute, you can see what I'm talking about. So SIGA moved all the way up to 1750, and 1750 exactly before it was rejected, and then it's on its way back down. Whereas EBS had its retracement, but now it's on its way back up and it's above the VWAP. So between those two, EBS is actually looking a little bit stronger, but we'll see. It's on low volume, so that's never a good sign. Jack, that's all we do here is banter. We banter and snore. I give out the banter, the dog gives out the snoring. I'm surprised no one in the chat's given me any grief over the football yesterday. Not that they could, because we actually won, but we didn't win the title, so. Funnily enough, got a little bit of a spike from SIGA. Almost up to the VWAP. That's a good 60-cent pop. Nice. We've got 12 minutes to the bell. Nothing moving that hasn't already moved. Let me have a look on my Tell you about SIGA. So SIGA, it moved on Friday. It's the bioscience stock. They have vaccines for the likes of smallpox. Now, monkeypox was reported as being as an outbreak last week, and a whole bunch of bioscience stocks are moving on the back of that. So if they have a smallpox vaccine, it can be used to treat monkeypox, apparently. Actually, there's quite a... Really? Have a look at the key data. No, it's not. I've just seen a report that SIGA is amongst the Wall Street bets interest for short squeeze. It's like 2% short interest. It's not. There's no short squeeze there. Not from the data that I'm getting. So it's misinformation. If people are saying that it's down to Wall Street bets short squeeze interest and all that kind of stuff, that's misinformation. So part of the news associated with SIGA is European Centre for Disease Prevention and Control urges EU member states to plan for monkeypox jabs.